All right. My name is Chris Campbell. I'm a practicing CPA and I work with all the mid-sized businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about the dilemma that many business owners face in regards to paying their taxes and being timely with paying taxes, right? It's usually the self-employed folks carry balances with the IRS. They're always trying to play a delicate game, right? You need enough cash to operate your business and live. You also got to stay on top of your tax payments so the tax folks don't come and haul you away to jail, right? So it's always a balance. So I get hit with questions a lot from business owners and they'll say, I have money for taxes, but I owe back taxes, right? You also want to be somewhat responsible and stay on point and stay current with your current tax, right? And theoretically, you're supposed to be paying your taxes every quarter, right, for the current year. So the idea is that you're supposed to pay your taxes so the idea is that by the time you file your return, you don't have this large balance that's due. So in practice, you're supposed to file as you go through the course of the year. But what happens with many tax and especially business owners is you're just trying to make it. You're trying to get through. You need cash for the business, cash to live. So you want to put the money away, but you still got to survive in the interim, right? So what tends to happen is you push it off and you have a tax bill, right? So you have a tax bill for the previous year, but then you still need to keep paying. So like current for the current. In that situation, some clients will reach out and they'll say, all right, look, I'll put some money aside for taxes. However, I'm not in a position to pay both in the sense of pay my back and pay my current. So which do I look to service? What I tell my clients is depends upon your balance and how much you actually have set aside. So my rules of thumb is you have enough to cover your current payments, your estimated payments, then stick to that. Because the other argument is that the current taxes you're making your quarterlies, they aren't accruing interest, right? So there's an argument against not doing that is your quarterly taxes are not accruing interest as of yet versus your past tax bill, they are, right? Interest compounds daily. You also have penalties associated with that. So one thought might be, you know what? If I make the payment, I stop the bleeding, right? I stop the bleeding. I don't have to worry about any interest and or penalties, and I'll just pay current balances later. Now, the only issue with that is why I'd say if you're able to stay current, then stay current. And so the reason why I tell you to stay current is that with prior balances, you can always put them into payment plans, right? And you can make a play to put your past in payment plans while staying current. So now that past balance will still accrue interest and penalties while you're paying it down, but you have the IRS or the state, you have them at bay, right? And they won't take additional collection actions because that's ultimately what you want to avoid. Avoid paying interest and penalties or pay as little as possible with that, but you don't want any sort of enforcements where any liens or anything get placed on you. So you can always put the past into a payment plan, right? To keep them off your back. Now, the thing with the payment plan is that, and especially if you stretch it out over multiple years, the condition of your payment plan is that you will continue to stay current on future years of taxes. Now, with the IRS, I guess they can go either way. I've seen it go both ways, where if you're a payment plan and you file your taxes, and let's say for a subsequent year, and you have a significant balance, your current payment plan is considered null and void. And at that point, they'll start the enforcement actions before you were in a payment plan, because one of the terms of the payment plan is you're current with everything else. So they're not expecting to see any tax bills, or especially any large tax bills. So you have to keep that in mind. That will be a reason to stay current so that you avoid defaulting on any current payment plans. Now, I've also seen it where you have a balance and the IRS will take the liberty of just rolling your balance into your current payment plan. But I think they'll only do that, and I don't necessarily know what the threshold is, but if it's a smaller amount, they'll probably don't have a problem doing that. But if you're in a payment plan and you come and you have another significant bill, I don't think they would be as inclined to do that. So that would probably be the biggest reason, because I've seen a number of clients get jammed up that way because they're in a payment plan and we file and they owe, and the next thing you know, they're getting harassing letters again. And then I get that call, hey, I thought we were in a payment plan. Why am I getting these harassing letters? And 9 times out of 10, that's why, is because you went ahead and you filed the tax return and you still hold balances, and they're expecting you to make quarterly payments. So going back to the original question, is that if you have a question or a dilemma as far as what to pay, I would say try to stay as current as possible, and then always work on with them with the back taxes, because you also build a lot of goodwill with the IRS when you show them that you're staying current, and they tend to be a bit more flexible about working out payment plans when they see you're current with future taxes beyond that. So shows them that you're being responsible and trying to take care of things. All right. And then if you're not able to stay current and you don't have a shot at staying current, then if you're not in a payment plan, take care of the back taxes. Because at that point, you are just looking to mitigate your interest penalties. And then at some point, it would probably make sense to hop into a payment plan. So my rule of thumb is, if you're able to stay current, stay current. If there's a long shot to stay current, pay the oldest balances first, and then at some point look to wrap up into a payment plan if you are able to do so already. So that's all for now. Hopefully this was helpful. And if you have any more questions about this topic or any other tax or accounting related questions, feel free to reach out.